I've been sick for the past couple of days. I thought I was done being sick, but I feel like I'm about to lose my voice. This is not normally how I talk. So if you guys are new to my channel, I do not talk like this normally. So bear with me in this video. Um, if you guys are new to my channel though, I made a free Forex training. If you guys want that training, click the link in my description. Also, if you guys want to get mentored by me and actually learn my one-on-one US 30 strategy, or be mentored one-on-one and learn my US 30 strategy, DM me on Instagram. And lastly, if you guys could like this video, hit that subscribe button for me if you aren't subscribed, and turn your post notifications on. I am posting daily, Monday through Friday. So if you are new to my channel, check out some of my older videos. I have a ton of videos based around US 30. US 30 is all I trade, and we're going to actually go over a crazy US 30 strategy in this video. So without further ado, let's get into the video. Alright, I'm happy the video is big on me. My voice sounds horrible, guys. I don't know if it sounds better or worse than my normal voice. But just bear with me. So, I want to show you guys a very simple strategy. It is called the divergence strategy. You can call it the divergence. We're using divergence in this video. Some of you might be like, oh, I've heard of that. Oh, I don't know what that is. Perfect. It's not really like, you guys all really know my US 30 strategy at this point in time, or the basis of it. If you guys want the whole strategy, DM me on Instagram. We'll apply or book a phone call to see if you're right for my one-on-one mentorship. But with this strategy, we're going to be using one extra indicator, and we're not really relying on this indicator. It's just going to give us extra confirmation. So we're going to go through the market, see if it's adding up, and see how it can help us out. So what we're going to do is go to indicators, type in RSI. Then we're going to get this one, RSI plus. And excuse the sniffing, guys. My whole face and body feels just congested right now. If you guys could like this video, I think it will make me feel better if you do that. So we have our RSI plus right here. I kind of like it in the dark mode. I'm not going to lie. It looks a little bit cleaner. I'm going to make my cursor on the appearance just all solid, aligned. There we go, much better. So when I'm using the RSI, I want to go to an example to explain this to you guys. It works honestly best on the hour time frame. You can use it on the minute 15, but I like to use it on the hour. Okay, so I want you to notice how we have basically equal highs right here. 1, 2, 3 equal highs. But notice how this third high, we had a bigger drop versus the second high right here and this first high right here. So when we're looking at it, I like to look for double tops or triple tops. Usually I'm looking for like double tops, and we can see right here that this double top is a little bit lower than this top right here, this high right here. But I want you guys to notice that on the RSI, look at how the RSI plus, it's slanting down. So overall, the appearance of the market is saying, okay, it's going high, then low, then it's going to go higher. And a lot of traders are looking at this and they're like, okay, we have this big bullish candle. It's about to really push up and go high. So it's like a pretty girl. There's a pretty girl wearing a nice outfit. She looks super good on the outside, but you guys don't know on the inside she has an evil heart. She's just a really mean girl. But that's the appearance of the market. Then we actually have the factual data side. The data is telling us like, hey, the buyers are leaving the market. Sellers are starting to regain control of the market right here. So we can see that the sellers are starting to gain control and the buyers are leaving the market. So this is how we have to look at the RSI plus and see that this high right here is not as high as this high on the RSI. But this high is lower than this high right here, which is higher. But the RSI is showing us that it's lower. I hope that's making sense for you guys. And the best thing that you guys can do is actually like go to your chart and mark this up. But we're going to go over a couple more examples, so don't worry. Okay, we'll delete that. Like I said, it works best on the hour time frame.
This video is sponsored by my program FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started, and once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply.
So here's a really good example. We have this high right here, and this high was at the end of the New York session, but I like to see it happening during our trading time, 6:30 a.m., when the New York Open is coming out, when this divergence is coming out. So we can see right here on the hour time frame, we have our 5 a.m. to 6 a.m. candle, which was a reversal candle. But look at this. A lot of traders are looking at this, and they're saying, okay, well, we have this high right here. It's most likely going to push up and go high. But then we have to look at our RSI and be like, but wait, why is this high lower than this high, but yet on the RSI it's seeming to not get as high as it did the previous time? So that's showing us that there were more buyers in the market right here than there are buyers in the market right here in present time. Even though it's pushing to go higher, it's still showing us that the data that buyers are leaving the market and sellers are going into the market. And then we can replay it. Boom. There's that cross under. The divergence goes. You could have sold right here if you needed to, if you didn't get that entry. And if we go the minute 15 time frame, I think it was a little bit more present. So let's replay a couple bars back. Let's go to the market open. Okay. Here's that 6:15 to 6:30. We can see the bearish candles already starting to come out. And then we can see the divergence RSI right here. Look at how we have this previous high and then this high, but it's getting lower now. It's starting to get lower. So that's telling us that buyers are leaving the market, sellers are now coming into the market. Okay? Let me delete the replay. And we'll go and find another example. Let's look at the minute 15 time frame for an example this time. Okay, so all I'm really looking for is like two lows, one low to be lower than the other, or two highs. Okay, that's not really, this is kind of a valid example. We have this low, and then this low that went lower, but look at the RSI, how it's slightly going a little bit higher. It's slightly starting to go up a little bit more. But right here, divergence is to the downside. So notice, why would they be kind of at equal lows or highs? If it was going to keep going down, it wouldn't be equal like that. So let's find a better example, a more clean example. And whenever I give you guys a video, you guys should be going to your chart and seeing if you see what I see. Okay, here's a very nice example right here. We have this low, and we have this low going lower right here. But look at the RSI, how this low isn't as low as this low right here. See how's that upward slant? Meaning more buyers are coming into the market, but yet it's telling us right here, okay, it's going down, lower high, and then it's going to form a new lower low. Well, look at the RSI. The RSI is telling us, no, there's divergence. That's not going to plan out how people think it's going to plan out. So usually what I'm looking for is that double top, and then I'm looking for that double bottom. But I'm looking for the second bottom to be lower than the first, or the second high to be higher than the first. And then I want to look at the divergence indicator and see how that's lining up with the chart. Okay, this might be a little confusing at first. Let's go and find one more example for you guys. We'll do it on the minute 15 because I know a lot of you are using the minute 15. Okay, let's see if I get one more example. Alright, here's another example I marked up. We have this high, then this high. This high is a lot higher than this high in the market. But look at the divergence down here. See the downward slant? This high is higher in volume, but this high is lower in volume right here. So if you guys don't know, the RSI is the relative strength index. It's telling us the strength of the index, how much strength it has. So it's telling us that the strength is being depleted right here and it's becoming lower. And you could have saw this happening once again right at the market open. Here's at 6:15, a bunch of candles congregating and then big drop. Try this indicator. Let me know what you guys think. If you guys find any interesting things about this indicator, comment them below and let me know what you guys have found. I will see you guys in the next video, and please excuse my raspy voice. I hate it. I'm just happy I'm done with this video. I'll see you guys later. Peace out.